Markets continue on the volatility game and investors are constantly looking for bargains in the marketplace. But what about the individual consumer? Are people afraid to spend money on luxury items in these current economic conditions? Joining us now at the Nasdaq for the closing bell is the CEO of Xcel Brands, Robert D'Loren. Robert, thanks so much for being with us.
Thank you, Daniela.
So let's start by talking about the state of the consumer right now. We saw consumer confidence hit a 7-month high in August. Are you seeing this at Xcel? Are consumers still buying?
Daniela, I think it's a little too early to tell if the current market volatility is in any way impacting consumer confidence. We certainly haven't seen anything in either of our business segments, whether it's interactive television or in our department store business and or any of our specialty big box retailers. So the consumer seems to still be confident.
Now, we know that the retail consumers do not necessarily find the need to physically present themselves in stores anymore. This is what the trend seems to be. So how powerful is QVC and online shopping, and how are these outlets changing the face of the retail industry?
Daniela, Xcel was formed with a simple vision, and that was to reimagine shopping, entertainment, and social as one thing. And the consumer over the last 2 or 3 years has become increasingly more comfortable with distance shopping, whether it's through interactive television or online sales. So this trend plays right into our business strategy, and we think that the consumer will continue to buy more goods online.
Do you know how many households you can reach via QVC?
QVC broadcasts into approximately 100 million households here in the U.S. and nearly 320 million households worldwide. So the reach is quite extensive.
Now, you finalized the $12.5 million acquisition of C. Wonder and hired celebrity stylist Brad Goreski as the brand's new creative director. Where are you moving Xcel Brands? What's next?
Well, with C. Wonder, matching Brad and the C. Wonder brand, it was almost a perfect pairing for us when you think about the strategy of envisioning or reimagining shopping, entertainment, and social as one. Those two play perfectly together, and our plan is to launch the C. Wonder brand this spring on QVC, to be followed by a launch in the Hudson's Bay stores in the fall.
Well, which leads me to my next question. Now, we know the C. Wonder brand didn't work at the brick and mortar level. So what potential did you see in it to relaunch it as a brand available on QVC?
Well, we believe Chris Birch did an extraordinary job making strong ties with a customer base that spans across 5 generations, from Gen Z straight up to the baby boomer. And we believe that that customer demand and loyalty is still there. And we are now going to deliver the fabulous products that Chris was making, both in interactive television with QVC and in bricks and mortar with Hudson's Bay Company.
Well, to wrap, we cover the gold and jewelry sector extensively, and as gold and other metals continue to be in a bear market, do you see this affecting your jewelry lines, or are people still willing to spend on these products?
People are still willing to invest in jewelry today, Daniela. Price points are more sensitive than they were, say, 3 to 4 years ago because of the commodity prices of gold. But bracelets in both gold and silver are trending extremely well for us, as well as watches. So customers still there. We just need to adjust our price points for the customer in today's market.
Robert, best of luck. Thank you so much for joining us today.
Thank you, Daniela.
And thank you for watching this edition of Kitco News. We'll see you tomorrow.